right, welcome back, y'all. In our previous lesson, we started work on building our very own expert advisor, and we got our code to the point where our expert advisor would tell us when it's time to open a long trade. And just to refresh, that was when our short moving average was above our long moving average, and also our Arun upline was above our Arun downline. So you can check out my previous video to catch up if you need to. But for today, now that we know when to trade, we are actually going to execute that trade. So we're going to use the OrderSend function to send the trade, and then we'll close the trade by using a combination of the OrderSelect and OrderClose functions. Now our trade can also close with the TakeProfit and the StopLoss that we give to the OrderSend function. So we'll calculate those in a dynamic way based on volatility in the market. We'll also calculate how much we're going to buy, our lot size, based on risk. So we'll write some utility functions to do that, and then at the end of this all, we're going to backtest our strategy, see just how well it does. All right, well, let's get started. All right, so I'm back in my meta editor where we left off in the previous lesson. We had just created our long condition and checked to see if it did in fact work, which we are super sure that it does in fact work. So we can go ahead and get rid of this print statement now. Oh, and one more thing. I added a return at the bottom of this function in the previous video. We don't actually need that. Like, it won't hurt for us to have it, but in a void function, it's not actually necessary. So we can just get rid of that. We can go ahead and get rid of this print function now. And instead of printing something when it's the long condition, we now want to actually open a trade. So for this expert advisor, we are just going to go long. And also, we're only going to have one trade open at a time, just to keep things a little bit more simple for this video. So in addition to checking the long condition, I also want to check to see if I don't already have an open order. So I can use my orders total function to give me the total amount of orders I have open. And I want to make sure that that is less than 1, or equal to 0 would work as well. Okay, so if that's the case, we are going to call our OrderSend function to open a trade. So let's take a look at the documentation and see what that OrderSend function is. All right, so here we have it here, right? The main function used to place a pending order. So we'll just be using market orders for our expert advisor today. And let's see what sort of parameters this function takes, right? So it takes a symbol, which pair are we trading? It takes a command, what type of order is this going to be? Like a buy or a sell or a limit buy or a limit sell? It takes a volume, which I feel like they should have actually called lots, because all the volume is the number of lots we're going to buy. And I guess this is a good time to cover this, just really quick for clarification. When we're looking at our chart here, like let's say Euro USD, for example, Euro is our base currency and USD is the quote currency, or sometimes referred to as the profit currency. And the price that we have down here is how much it costs in US dollars to buy 1 euro. So we would refer to that as 1 unit, buying 1 euro. Now, most brokers don't accept us buying in units. They want us to buy in lots, which is generally 100,000 units. Now, we can buy in fractions of a lot up to a certain point, but we can't just buy like a single unit at a time. So just so we're clear on that, we're going to write a function to calculate an appropriate lot size later on. Okay, so that was volume. Price, what price do we want to buy at? We'll just go with the ask for a market buy. Slippage is how much we're willing to let price change between us sending the order and it actually getting executed. So we'll do a little calculation of that as well. Okay, so then we have the stop loss, right? At what point do we think the trade has gone poorly enough that we're just ready to take our money out and don't want to lose any more? We have our take profit. At what point are we comfortable that the trade has done well enough and we want to secure our profits? We have our comment, which I'll show you guys where that shows up on the chart. The magic number, we're not going to do anything special for, so I'll just explain it right now. This is used for identification purposes, not the trade that we sent, but rather identifying the expert advisor that sent that trade. If, for example, you on your trading account have multiple expert advisors working at the same time, you could find out which expert advisor sent any particular trade by looking at the magic number on that trade. Okay, we have an expiration. If this is a limit order, for example, how long do we want it pending before we just say we don't even want to open this trade anymore? If we set this to 0, which we will, that just means no expiration. And again, it's a market order in our case, so nothing to worry about there anyways. And then we have a color. This is an arrow that will actually show up on the chart. We'll just make this green. Okay, so those are the parameters we need, and there are 4 things here that I want to actually calculate. And that is going to be the volume, the amount of lots we're going to buy, the slippage, the stop loss, and the take profit. So let's go ahead and declare those variables in our code, and then we'll give them a value when we need to. Okay, so I'll come here outside of my if statement, and I'll start declaring these. So slippage is going to be an integer. Everything else will be a double. Okay, so I'm not going to give these a value until I have to inside of my long condition and if orders total is less than 1. So let's start with the slippage. That'll be the easiest one. So again, this refers to how much we are willing to let our price change between us sending the order and it actually being executed. So if we want to buy at the ask price, and between, as it goes through the network, as it gets to the broker, if the price goes up a certain amount or down a certain amount, we can say if it goes too far, we don't even want that order to be fulfilled anymore. Now, not every broker honors this parameter. So do be aware of that. You want to check with your broker before you worry about the slippage. But for those that do, let's find a good value to give this. And this is a strategy that I've seen around that I think is kind of neat. We are going to make our slippage a function of the spread. And I like this for 2 reasons. The first being the OrderSend function, it expects this slippage parameter to be in points. And points can mean different things in different brokers. So if we go to the chart here, we can see that we're dealing with a 5 and 3 digit broker, right? For pairs like Euro USD, I have 5 digits of specificity on that price quote. And a pair like USD JPY, I have 3 digits of specificity on my price quote. Some brokers only give you 4 or 2 digits of specificity. And in those cases, the last digit here would be this big one right here that we see in our spread, and that is going to be a pip. Now, this is a pip in a 5 and a 3 digit broker as well, but they have also a 1/10 of a pip, again, to give us more specificity in the price. So a pip doesn't move no matter what broker we're using. A point, however, has nothing to do with pips. It is always the last digit in that price quote. So in a 4 or a 2 digit broker, a point will be equal to a pip. Right? It'll be this last digit right here. The 4th one or the 2nd one in USD JPY. But in a 5 or a 3 digit broker, a point is now actually equal to a 1/10 of a pip. So when we're giving slippage a value, that is going to be in points. So we're going to want to know whether we're dealing with points equaling a pip or points equaling a 1/10 of a pip to get an appropriate value for our slippage. So one way we could do that is checking to see how many digits our broker gives us using the digits built-in variable. But we can circumvent this calculation by setting our slippage to the spread, right? Our spread is also in points. So right here on USD JPY, we're looking at a spread of, it's moving quite a lot, a spread of about 10 points, right? More or less, 13 points right now. So it's about 10 points on a 3-digit broker, but it would only be 1 point on a 2-digit broker, right? So it's equal to 1 pip more or less either way, but the points are going to change depending on the broker. So if we were on a 2-digit broker and we set our slippage to the spread, it would equal 1, and that would equal 1 pip. But if it were a 3-digit broker, our spread would be 10, and so our slippage would be 10, which would still equal 1 pip. So this just solves a few problems for us in dealing with this conversion of figuring out how many digits we need. But the other reason I like setting my slippage to the spread is because it makes this parameter dynamic, right? If we have a very narrow spread, that means there's a lot of liquidity in the market, and our broker is confident that they can find any given price to fulfill our particular order. Whereas if the spread is very wide, there is perhaps not a lot of liquidity in the market, or there's a big geopolitical event going on. And our broker is not very confident that they can necessarily find the price that we want to fulfill our order. So if the spread is narrow, there's no reason to accept a large amount of slippage. We shouldn't have to. But if the spread is very wide, it's reasonable to expect that there might be more slippage on the order. And if our expert advisor is telling us to go ahead with the trade anyways, we'll want our order to be fulfilled. Okay, so how we're going to do this is we're going to use the market info function, and that will take a pair, so a symbol, and then we want to get the spread. And this is a very useful function. We'll actually use this a few times today for just getting information about things in the market. Okay, and we're going to multiply this by 2. So our slippage will be 2 times the spread. Again, keeping this dynamic with the market conditions. Okay, so that is it for slippage. Now let's deal with our take profit and our stop loss. So the way I want to calculate these, again, another popular strategy that I've seen floating around that I like is we're going to make our take profit and our stop loss a function of volatility in the market. So how are we going to measure volatility in the market? We're going to use an indicator known as the ATR, or the average true range. So we can hop over to Investopedia to see what that actually is. The basics of it is it tells you, well, the true range will tell you how much any given bar is moving, like how much price is fluctuating in a certain time frame. All the average true range does is takes a length of bars and averages out their true ranges. So the true range is calculated by taking the maximum value of either the high minus the low, the high minus the closing price, or the low minus the closing price, and the absolute values of the latter two. So again, this gives us a sense for how much price is fluctuating. So if price is fluctuating quite a lot, in the certain amount of bars that we're checking the average of, then we might expect to get a little bit more out of our take profit, and also be comfortable setting our stop loss a little bit lower, being a little bit more liberal with it. So we don't get stopped out of a trade if we know price is bouncing up and down. If our true range, or if our average true range is a lot lower and price isn't fluctuating that much, then we can be a little bit more conservative with our stop loss, since we don't expect to get bounced out of a good trade. And we can take profit a little bit sooner as well, since there's no reason to believe that price will suddenly jump up if it hasn't been jumping recently. Okay, so let's go ahead and write that function. Well, first let's set these values, and then we'll write the function afterwards. So I'm going to create a function calculate take profit stop loss, and that function will take a price, will be the ask, a deviation, I'll do 2 for my take profit, and an enumeration that we're going to build ourselves. We'll see that this is going to be a good use case for this. So out of my calculate take profit stop loss function, I want a long take profit here. So we'll write this enumeration next as well. But let me go ahead and just get this line for our stop loss while we're here. So for my stop loss, the price will be the same. My deviation, I'm going to set this to 1.5. And of course, I don't want a long take profit anymore. I want a long stop loss. Okay, let's go ahead and write this enumeration, and then we will create this function. So I'm going to come up under my inputs. I'll make a new section, enums. And I'm going to call this enumeration enum exit price. I think that makes enough sense. And it's going to be defined by 4 constants: a long take profit, a long stop loss, a short take profit, and a short stop loss. And we'll see how we use these in our function. Okay, so let's come down and write that function now. So this will return to us a double And again, my parameters are going to be a price, a deviation, and that enumeration that we've just created. Exit. And we'll just call that exit. That'll be fine. Deviation there. Okay. Our first step here is to get a value for our ATR. So we can do that by using the IATR function in MQL4, very similar to the IMA function that we've used in the past. So this will take a symbol, period, a length, which we'll set to 14, right? How many bars are we looking at to average the true range of? And a shift, we'll just set this to 0. Okay, so now that we have an ATR, let's go ahead and calculate our necessary values. So I'm going to use a switch statement here to determine which value I need to calculate. Okay, so we're going to switch on our exit parameter. And let's build our cases here. So first we'll deal with a long take profit. And if that's the case, we're going to return our price plus our ATR times the deviation. Okay, and we're going to basically copy this about 4 times, make some small changes. So now for my long stop loss, the only thing I need to change here is instead of adding to my price, right, I want to subtract from my price. So that is our long take profit and our long stop loss. Now let's write these for our short cases. If we're going short, let's say a short take profit. Right now we want to look below the price, right? We're going to take profit if the price drops. So nothing we need to change about this line. And then we can also look at a short stop loss. Right now our stop is going to be above the price. So we can add to this. Okay, and of course our default case, which we shouldn't worry too much about getting into because we're using an enumeration. Our code won't actually compile unless we have one of these cases in our function call. But just in case, and then also so our code compiles for the switch statement, let's return 0 in our default case. And if we give our take profit or our stop loss a value of 0 in the OrderSend function, it will just assume that we don't have a take profit or a stop loss, right? It won't just like get us out the trade immediately. Okay, so unfortunately, I know we're doing a little bit of repetition here with our return values, but there is no way to do like long take profit or short stop loss in these switch statements. So if you want to use like an if then else statement instead, that might make sense too. I did want to show you guys what the switch statement in MQL4 looked like though. And also a great use case for our enumeration. Okay, so that is all we have to do for our calculate take profit and stop loss. Let's go ahead and compile now. And let's see, I definitely missed something here. Okay, there we go. So I had 3 errors there, 0 errors, and a couple warnings that we'll take care of. Oh, one, I always forget about this. This is a dumb warning, I think. For our slippage, this is an integer value, but this function, the market info is going to return us a double, even though our spread comes through as an integer anyways. So to get rid of this warning, we're just going to cast this as an integer. We should only get 1 warning now, and that's when we're not using our lots yet. So let's go ahead and give a value to lots now. So we've calculated our stop loss based on volatility in the market, but we haven't taken risk into consideration yet. Like one way of trading, and usually the first way people start trading is they will have a certain amount of money that they want to give to their expert advisor and just say every trade, put all that money into it or divide it among multiple trades. And if they want to maintain a certain risk, they move their stop loss in order to not lose too much on that trade. Like if you want to risk 2% of your trade, then you would give a certain amount to your EA and open the trade with this amount of lots and then move your stop loss like 2% down from the price. So that's one way of managing risk, but we have already calculated our stop loss and it is based on volatility in the market, right? We were a little bit smarter about it. but it had nothing to do with our risk. So instead of making our stop loss a function of our lots and our risk, we're going to make our lot size a function of the stop loss and our risk. So let's write a function that does that. So I'm going to set my lots equal to calculate lot size. And this function will take as its parameters a price, the stop loss, and our risk, which we're just going to hard code at 2%. But you might make this an input parameter. Otherwise, we're not going to bother with that today. Okay, so how are we going to perform this calculation? For that, I'm going to bring us over to a spreadsheet so we can get a really clear picture of what we're doing here. So let's jump over to my handy lot calculation spreadsheet here. And I got some colors. Let me explain what's going on. So everything in blue here, I have my entry price, my stop loss, my risk, which you might recognize from the parameters of the function we're about to write. And then I also have my free margin, which is the money I have available to trade with. Now, since we're only doing one trade at a time, this is effectively our account balance. So everything in blue here, these are all constants, nothing we need to calculate. This is what we're giving to the function. And then I have some things on the right, a couple things in green and a couple things in yellow. So everything in green here, my max loss. This is the maximum amount that I'm willing to lose on any given trade. And this is simply my risk times my free margin, right? So if I have $10,000 in my account balance, I only want to risk 200 on this trade. And then I have this actual loss here, which is how much I'm potentially going to lose on this trade if my stop loss is hit. So this is the amount of units I'm buying times the entry price minus the amount of units I bought times the stop loss price. And my goal is that this column should always equal this column, right? This is the amount I'm willing to lose based on my risk, and this is the amount I will lose if my stop loss is hit. So the real meat of this spreadsheet is this column right here, the units I actually want to buy. This is the number that I want to solve for. And the way we're solving for this is we're taking the maximum amount that we're willing to lose, and we are dividing that by our entry price minus our stop loss price, which we could think of as the amount of points we're going to lose per unit, right? So this didn't make a whole lot of sense to me when I first did the math out. Well, I think it's easier to wrap our heads around what's going on if we sort of flip the math around a little bit. So I'm going to take us to a handy diagram here. I love these things. So I have some stuff written out. So we have our entry price, right? This is basically from the the first row of that spreadsheet. So I have my entry price, my stop loss price, and I'm going to get out of that my potential losses per unit, right? Take the entry minus the stop loss, which brings me out to 0.02. Then I have down here, my risk times my free margin. This is the maximum amount I'm willing to lose. So we can think of this number as the our potential loss, and we can think of this number as our maximum willing loss. So if we take our units and multiply them by our loss per unit, we're going to get how much money we're actually going to lose, right? So this is all in dollars. So really we're looking at losing 2 cents per unit here. So our actual loss, we want that to be equal to our maximum willing loss, right? Right over here. So we can switch these values out, and we come out with our units times our loss per unit should equal our maximum willing loss here. So if we have that equation, we can just use some math rules. We can divide both sides by loss per unit, and we come out with the equation that we had in the spreadsheet. Our units is going to be equal to our maximum willing loss divided by our loss per units. So again, I think it makes a little bit more sense to look at this formula and then just flip it around and do some substitutions than just looking directly at this formula down here. Okay, so let's go ahead and get these values in our code and do this calculation. So I'm going to come back to my code here, and let's create this function. So this will return a double for us. And again, we had a price, a stop loss, and our risk. Okay. Let's first get that value, our maximum willing loss, right? How much are we willing to lose on this trade? So that is going to be max loss. That is going to equal our account-free margin. We can use a function to get that for us. And we're going to multiply that by our risk. And now let's get that value, our potential loss, right? How much are we going to potentially lose on this trade if our stop loss is hit? And that is going to equal our price minus our stop loss. And now we're only going long in this expert advisor. But just to make this function a little bit more dynamic, let's go ahead and take the absolute value of this. So this would make sense if we were going short as well, and our stop loss was actually greater than our price. We're really just interested in the difference between these numbers. Okay, and then let's also declare a value for the amount of units we're going to buy. We're not going to give it a value just yet, though, and there's a reason for that. So I want to come back to a diagram again. Our spreadsheet, the calculation we looked at, this works assuming that our account currency, which is in, let's say, US dollars, right? We're assuming that that is equal to the quote currency on our symbol pair. So again, to remind us, if I'm looking at Euro USD here, Euro is my base currency, and USD is my quote or profit currency. My price is also in USD, right? This is how many dollars it will cost me to buy 1 euro. In a case like USD JPY, USD is now my base currency, and JPY is my quote currency or profit currency. So this price right here isn't in US dollars, it's in Japanese yen. So how does that change our equation? We can come to another spreadsheet here, or another diagram. Okay, so again, in our first case, where USD was our profit currency, our prices were in US dollars, which meant our potential loss, our loss per unit, was also in US dollars. Our units cost us in US dollars. And our maximum willing loss, which had nothing to do with our symbol, that was just our risk times our free margin, we also considered that to be in US dollars. Well, if I flip my pair around, and now USD is my base currency, and some other pair, right, Japanese yen is going to be my quote currency or profit currency, these prices are no longer in US dollars, right? They are now in Japanese yen. And similarly, our units will no longer cost us in US dollars. They will cost us in Japanese yen. But our maximum willing loss, that currency denomination didn't change because it had nothing to do with the symbol on our chart. So this function would assume that this is in Japanese yen when I make my calculation down here, which would say I'm willing to lose 200 yen on this trade, which is not the case. I'm willing to lose a lot more than that. So we have to make this conversion ourselves and change our maximum willing loss. We can multiply it by the price we're buying at and convert that to yen before we calculate our units. Okay, so hopefully that makes sense. So let's write an if statement and if then else to figure out which case is which. So I'm going to say that if my account currency, if that is equal to, let's say, the profit currency first. So I can get that by using the function symbol info string. And that will be for our this symbol on the chart. And enumeration, I want the currency profit here. If this is the case, then we can go ahead and go with that first formula we looked at. So units will equal our max loss divided by our potential loss. Now, of course, that will give us a double, but units is an integer. So let's go ahead and take the floor of this. We always want to round down to maintain our risk. And then I'm also going to cast this as an integer just to quell any warnings, because I hate getting warnings. Okay, so we can do almost the same thing in another case, right? We'll say else if our account currency is equal to the, actually let me put a slash here. If our account currency is equal to the base currency, okay, then all we have to do is take our max loss and we want to multiply that by the price, right? We have to make that conversion ourselves. Okay, and now there is another case, right, in that our account currency does not equal our profit currency or our base currency. And in that case, else, we are just not going to handle it. For the sake of brevity, we're not going to worry about that right now, right? This tutorial is getting long enough. So we're just going to print an error here. We'll say error invalid currency pair for the sake of brevity. We can just go ahead and also return 0. And we'll handle this return value of 0 in our onTake function. Okay, so we're not quite done yet. There's still a couple more things we want to do. And if we come back to our spreadsheet, you might have noticed in this first column, for example, that the actual cost of buying these units exceeded the cost or exceeded the amount of money that we had in our account. And that is going to be the case if we have a very conservative stop loss. For example, if I set this to 1.149, we could see that I would be prepared to buy 200,000 units and spend $230,000 on this, which is way more than I have in my account. And that's okay. All that means is that I am able to throw everything I have into this trade without risking too much. So it's not necessarily a bad thing. But we definitely want to check to see if this is the case before we finalize our units variable so that we don't try and execute a trade that we don't have the money to execute. So let's check that. I'm going to say if my units times my price, and this will be in our profit currency scenario, if my units times my price is greater than my account free margin, this is a great time to introduce leverage into our function as well, right? Because we can actually afford a lot more than our free margin if our account is leveraged, and almost any 4X account will be. So we already have a good value for units. We know that even if we buy all of these units, we're still within our risk profile. So let's just afford as many as we can. So I'm going to say if my units times price is greater than my account free margin times my account leverage. Get leverage here. There we go. And all this will do is if we are leveraged 50 to 1, for example, this will just return us a value of 50. Okay, so if this is the case, then we want to set my units to my account free margin, which actually I'm just going to copy this, that'll be easier. Account free margin times my leverage divided by the price. So if I can buy more units than I can afford and still maintain my risk, let me just buy all the units I can afford, is all we're saying here. And then we're going to say almost the same thing for in the case that our account currency is equal to our base currency. The only difference here is we no longer have to convert our units by the price. And again, this is kind of the strange thing in 4X here. But if USD is our base currency and it's also our account currency, then essentially we're buying US dollars with our US dollars by means of Japanese yen. It's a little weird, but our units is technically US dollars. That's what we're buying. So we don't need to convert them, right? A dollar is still equal to a dollar if that's what's in our account. So no, it's a little weird, but this will work. Hey, This is Ian from the future dropping in to let you guys know that there was one bug in this code that I did not quite get around to fixing during this recording. In the case in which we are willing to buy more units than we can afford, right? Down here where we're setting our units to the account free margin times our account leverage divided by the price. We actually want to set our units to the floor of that expression, right? We always want to round down and stay on the right side of our or the correct side of our risk management scenario. I think later on in this video, I do end up casting that expression as an integer anyways, which will essentially do the same thing for us. But it's always good to be explicit in our code and in what we are trying to do. So yeah, just wanted to drop in and let y'all know that. Let's get back to it. Okay, so we now have a good appropriate value for our units that will maintain our risk profile and also won't break our trade. So of course, our broker doesn't want us to buy in units. They want us to buy in lots. So we have to now take our units and convert that into an appropriate amount for a lot size. So we're going to use a few values here to do that. We're going to find out how many units are in a lot. We're going to find out what the minimum amount of lots we're allowed to buy is, the maximum amount of lots we're allowed to buy is, and then also what fraction of lot are we allowed to buy in. So we can be as specific as we possibly can here. So let's get those values. Let's say my lot size is equal to, we can use our market info function here again. This will be for this symbol. And we want mode lot size. That'll be our lot size. Then let's also get the minimum amount of lots we're willing to buy. Call that min lots. And that will also be min lot here. Let's get the maximum amount of lots that we're allowed to buy. And that'll be max lot. And then finally, let's get which fraction of lots our broker is allowing us to buy in. So we'll call that the lot step. Right there. Okay, fantastic. Now let's actually convert our units into lots, and then we'll check these. We'll check a few conditions afterwards. So our lots is going to be equal to units divided by our lot size. And again, we don't need to take the floor or cast this into an integer since lots can be a double value. Okay, so now let's check to make sure that we have enough, or that we're buying enough lots to even execute an appropriate trade in the first place. So let's say if, we'll say if our lots is less than the min lots, then we can go ahead and do something similar to what we did up here. Let's go ahead and print an error. We'll say not enough funds. Not enough funds. And we'll return 0 again. Okay, so that's if we don't have enough lots. Let's say if we have too many, right? We're sitting pretty, and our lots is greater than the maximum of lots we're allowed to buy, right? Fantastic case scenario. In that case, we're just going to return max lots. Nothing else we need to do there. Okay. Otherwise, if our lots is between our minimum lots and our maximum lots, let's make sure that we're buying in an appropriate fraction of lots. So let's adjust this value. Let's set this equal to the floor of our lots divided by our lot step. Let's multiply that by our lot step. Floor here. So all this line is doing is saying, let's say we came out with, on this line, a value of 2.13. But our broker only allows us to buy in tenths of a lot. Our lot step is 0.1. So we would take a 2.13, we would divide it by 0.1, which would give us 21.3. We'll take the floor of that, which will just give us 21, and then we'll multiply that by 0.1, which will give us 2.1, which is now an appropriate amount for our lot size here. So that is everything we have to do. At this point, we can finally return lots And we can go ahead and compile, and let's see if I didn't cause us any errors in doing all this. Let's see. Okay, fantastic. So we had possible loss of conversion right there. Oh, gotcha. Okay, again, just to quell our warnings here, let's cast this into an int. Okay. Fantastic. 0 errors, 0 warnings. That is what I like to see. Again, I hate warnings. Okay. So that is everything we need to do for our lot size. So I know we did a lot here, but this will be a great function that you can apply to any expert advisor. Again, since we didn't consider risk when we calculated our stop loss, we do want to consider it when we calculate how many units we're going to buy in order to maintain that stable risk profile. Very important. All right. So now we have everything we need for our OrderSend function. Fantastic. So let's finally actually write that function. So I'll do OrderSend. And this will take a symbol. So we'll just do whatever is currently on the chart. We need a command. We're just going to do a market by here. So we'll do operation by. Volume we have as lots. Price we're going to buy at the ask. We have slippage. We have a stop loss. We have a take profit. Now a comment. I'm actually going to add the comment up here just to save us some space in that line of code. So I'll show you guys where this shows up in our back testing. Say this is the comment. And we can add that right here, comment. And now we need a magic number. We'll just do 1, 2, 3, 4, 5. Of course, it would make sense to make this an input parameter if you were giving this EA to someone else or using it yourself. But this is all for educational purposes, so we'll just do that. Expiration of 0 and color. Let's do color green. Okay. Now, one thing I didn't mention about the OrderSend function, if we come back to the documentation here, is that this returns to us an integer value. And what that integer equals, come down here, is it returns to us the ticket number, right? Every order is identified by a ticket number. We will actually use that in a few minutes here, but we don't need to save it in a variable, and I'll show you guys why. But what is important is that if this returns to us a value of -1, that means that our OrderSend function failed for whatever reason. So let's check that and make sure we're catching that error. So I'm going to say if my OrderSend is less than 0, then let's print, make sure my face is out of the way here, get last error. And all this function will do is take whatever the most recent error that occurred was, and it will put it in the log for us. Okay. Oh, one more thing I forgot. Speaking of errors, is there were a couple cases in our calculate lot size function where we return 0. So let's make sure we check that and don't go forward with our trade if we're not going to buy anything in the first place. So we'll say if our lot is equal to 0, let's simply return. Let's get out of here. We've already printed the error in the calculate lot size function. So all we have to do is return here on the on tick. Okay, let's compile again, make sure we're all good. Fantastic. All right. So we've now gotten our expert advisor to the point where it will open a trade and it will close that trade if we hit our take profit or if we hit our stop loss. But let's say we get to the point where we are no longer confident that our trade is going to hit the take profit. In fact, we're pretty sure it's on its way down to that stop loss. It would be better to get out of that trade before we hit the stop loss, right? Like we're within our risk to hit that stop loss. That doesn't mean we necessarily want to. So let's close our trade, we'd say manually almost in another way, if we don't think we're going north anymore, if we start seeing that we're going south. So we'll say if we're no longer in our long condition, let's get out of that trade. So we can write if not long condition, and we have an open trade already, right? We have something to close. So orders total is greater than 0. Let's go ahead and close our order. So in order to do that, we're going to use the OrderClose function. So this returns a Boolean, right? True if it's successful, false if otherwise, so we'll check that. And it takes as its parameters a ticket number, the amount of lots that we want to close on, what price we're closing at, a slippage, and an arrow color. So you might be saying like, hey, Ian, we didn't save the ticket number, so how are we going to tell this function which order to close? Well, we have a solution to that. We are going to use the OrderSelect function to get a lot of values for us. So this function is very interesting. It's very useful, though. What this does is well, you can select your order in a couple of different methods. We're going to use select by position. And it gives us an array of all of our open orders. And we can select an order in that array. So since we only have one at a time, we can always select the 0th index of that to give us our order. And what this function allows us to do is, let's see, the OrderSelect function copies order data into the program environment. And it's going to allow us to call functions such as OrderTicket, which will give us the ticket number of that order. The order lots will allow us to get the volume of that order. All this good stuff. So we don't need to save the ticket number ourselves. We can use the OrderSelect function to get it for us when we want to use it. Okay, and I don't know if I mentioned this also returns a bool, true if it's successful, false if otherwise. So we'll check that too. All right, so let's get the OrderSelect and the OrderClose function into our code. So obviously we'll start with the OrderSelect. So I'll check if OrderSelect is true. Again, this will take an index 0, and then we want to select our order by position. Select by position, right there. Okay, so if this is true, we'll go ahead and close that order. Otherwise, let's go ahead and print get last air, right? Let's see what went wrong. Okay, so we're assuming that we have selected our order successfully. Actually, I need to add an extra parentheses here. Now let's close that order. So we can use our OrderClose function. And for ticket number, right, we've already selected our order. It's in our program environment. So we can call the OrderTicket function now. For our lot size, we can call the order lots, not volume, lots. For the price, since we're going to be selling back now, we're closing a long position. Let's sell at the bid. Slippage. This is actually a good time to recalculate our slippage, right? We could just use the slippage variable that we've already calculated, in when we created the order, but we don't actually know how long it's been between our OrderSend function and when we're ready to close the order. Probably not very long, right? But theoretically, the market conditions can have changed quite a lot between these 2 points. Maybe we lost a lot of liquidity or gained a lot of liquidity. So it's worth recalculating our slippage here. So we'll just literally copy this and get the new current spread, make our slippage a function of that. Okay, so we have our new slippage here. And then finally, our arrow color, we'll go with red. Okay, and again, this will return to us a true or false value. So we'll say if we get a false out of this, let's go ahead and print get last air, like so. Okay, semicolon there, and we can compile here. And fantastic, 0 errors, 0 warnings. That's what I like to see. So this is everything we need to do for our expert advisor. So thank you guys for sticking with me. But let's actually see how this does. We can now back test our strategy. So okay, we've already compiled. Let's head over to the chart. So I'll come over here. And now in order to back test our strategy, we can use MetaTrader 4's strategy tester. Super handy. We can get there by clicking this button right here or hitting Control R. I'm just going to hit the button. And let's see how we can use this. So first thing we need to do is select our expert advisor. So under Taproot EAs, I'll choose the Arun MA Cross. let's select the symbol we're going to do this on, and I'll just do Euro USD. For the time period, the higher the time period, the longer the strategy tester will take. So I'm going to do a minute 15 with us just to see how this works. I'll also show you guys what our results would be on the daily after we do this, because we will actually see quite a difference. And then we're going to go ahead and do visual mode here, so we can actually see these trades happening, in quote real time. Oh, I'll just show you guys this. Expert properties, we can set our initial deposit, so how much is in our account. We can set our positions here. Our expert advisor takes care of this for us, though, so I'm not going to bother changing that. And then we can also change our default inputs here. We would change that in the value column. The start, step, and stop are for the purposes of optimization, which we are not going to cover today. Okay, so we're all set. Let's go ahead and click Start. And when we do visual mode, this actually brings up a new window for us. I'm going to change this back to candles. And we're going. We see the ticks coming in. I'm going to get our indicators on the chart so we can follow along a little bit better. So I'll be the rune down MA cross, and I'll put that moving average crossover on the chart as well. I'll make this a little bit smaller. Okay, so actually, let me not make that smaller because I want to be able to fast forward here. And go back. There it goes. I'll make this a little bit smaller. Okay, so we're a little bit a ways away from our long condition. So let's go ahead and fast forward here. Okay, and let's see when we can get back up. Okay, I'm going to slow down. Looks like we're about to hit our long conditions. Let's see. Right there. Okay, perfect. Okay, so I'm going to slow this down. We are now in our long conditions. Actually, let me zoom in. And we can see that green arrow on the chart. And if we hover our mouse, we'll see our comment, and next to it, our magic number. And also some other values as well, like the price that we just bought at. Now this red line down here is our stop loss. It says so right here. Here is where we bought and the amount that we bought. And then our take profit. So our take profit is 2 ATR deviations above where we bought, and our stop loss is 1.5 below. So okay, we can actually see how this shakes out now. See if we did a good job. So let's speed this up a little bit, see if we end up hitting that take profit. Maybe, maybe, maybe. And oh, maybe not. Okay, so we almost hit our take profit. We didn't quite. We actually ended up, we would have, get my crosshairs here, we would have hit our stop loss, which is right here. You can see that little red dash. But before we hit our stop loss, we got out of our long condition. So we actually exited this trade a little bit, we made a bit of a profit, which we would not have if we hadn't closed out like manually, we could say. We were bound to hit that stop loss. So we found that closing that order early actually earned us a little bit of money. So very good. Okay, fantastic. That's what I like to see. So let's keep this running. Let's see what else we do. See if anything else interesting comes up. Okay, so we're getting some quick trades. We're in a bit of a range market now. So it looks like there is the same case. We got out of the long condition before we hit our stop loss. So that's very good. We would have lost there. Here okay. I went a little quick. I've got the crosshairs. Here we actually hit our take profit. And you can see what a take profit looks like. It's going to give us this more orange arrow. That might be tough. No, I can actually zoom in a little bit more here. Okay. So I made this a little bit bigger. So we can see that orange arrow right here is our take profit, which is great. So we hit our first actual take profit, and then immediately after, we hit our first stop loss. Then we have stop loss down here. We got out of the trade at a loss down here. So we're seeing a few good things, a few bad things. Anyway, we could keep watching this shake out and have a fun time doing it. But I think we've kind of gotten the point of how this is working in the visual mode. So I'm just going to go ahead and skip to the end, and we can take a look at our final results. Okay, so we have gotten to the end here, and I am going to go ahead and speed this up to finish it off. And let's see. Okay, there we go. So we heard our little squeak, like the little rubber duck sound that indicated that our strategy tester has done its job. It also will put all of the indicators that we called in our expert advisor on the chart at the end there. So that's why we saw the ATR pop up and the Saroon up and down. But let's go ahead and take a look at how we did. So let me make this a little bit bigger so we can examine it. And let's take a look at our results. So here we see all of the trades that we actually made, when we made them, some stats about them, profit, all that good stuff. And yeah, we made quite a few on this 15-minute time frame. If we scroll all the way to the bottom here, 584. So we'd actually divide that by 2. So what we did, like 262, no. So we'd actually divide that by 2 because this is every open and close. So we did 292 trades. So that's pretty good. Let's take a look at the graph. We didn't do very well at all. In fact, we almost lost literally everything. We made a little bit of profit at the beginning there, but quickly declined. So again, if I don't need to say it at this point, but this expert advisor is for educational purposes only. Do not actually trade with this strategy. So we can see that on our graph, on our report. We can get some more details. Now, this modeling quality and this mismatched chart errors, there is a way around this. This basically means that MetaTrader 4 didn't have good data for every single tick that we just went through here in our strategy tester. And there is a way around this. It would involve us downloading our own tick data from a third-party source and then giving that to MetaTrader. That's nothing we're going to cover now, maybe in a more advanced tutorial. Let's see what else. We have our initial deposit. We have our total net profit of minus $7,695. We have our gross profit, gross loss, percent of profitable trades. Okay, and lots of other fun things we can look at here, like a profit factor of 0.5. That's not good. We want a profit factor of definitely something greater than 1. But again, I'll show you guys another time frame we can test this on, and we can look at some different results. But lastly, let's take a look at our journal. This will give us a log of all of the trades that we made, information about them, tell us when we hit our stop loss, tell us if we hit our take profit here. Also tell us if we closed out an order. I don't see one right at the moment. This will also be where our errors printed out, right? Anytime we use a print statement, it will come through in this journal for our expert advisor. So that is the rundown on how to use the strategy tester. Before we finally leave, though, I do want to run this on the daily chart. Now, again, this is going to take quite a lot longer to run this strategy. I'm going to turn visual mode off. I'll make it a little bit quicker, and I'm really just interested in the results here. So here, I'm going to go ahead and fast forward through this part. Well, actually, here's what I'll do. While this is happening, I'll still fast forward, but let me go ahead and talk about the next videos to come. So congratulations, you guys. We have a fully operational expert advisor. We have back tested it. We've written code that determines our stop loss and take profit based on volatility in the market. We've calculated our lot size in order to maintain a stable risk profile. These are functions that you can use in any expert advisor that you use in the future. And perhaps in a later video, we can get even a little bit more advanced with those functions and cover more use cases, right? Like we didn't cover the case where we're trading a pair that has nothing to do with our account currency. So there's extra calculations we can make for that. So for the future videos, what to expect next, to finish off this video series, what we're going to do is we're going to take some of those utility functions we wrote and put them into an include file in our meta editor. And that will allow us to more easily use those functions in any given expert advisor without actually having to type them in to every expert advisor we use. So that'll be handy, keep us organized, help our workflow a little bit. In the video after that, we'll actually go ahead and open a demo account with a real broker. And then in that video, we'll also cover how to forward test our strategy, right? Backtesting is great and definitely the first step to developing a good strategy, but you never want to go live with an expert advisor straight from a back test, right? There's a lot of bugs that can happen in forward testing that you're going to want to be able to catch. Also, back testing isn't always perfect, right? We saw that modeling quality. There were a few mismatched chart errors. There won't be any mismatched chart errors, hopefully, when you are forward testing, right? You're dealing with real data coming in real time. And also, of course, A backtest is no guarantee of what's going to happen in the present, especially if you're backtesting far into the past. So you do want to forward test for a fairly significant amount of time on a demo account before you actually bring your expert advisor live. That's what you can look forward to in the future videos. And all right, let's see how this new test is going to turn out. Okay, let's see how we did with this same exact strategy, same exact input parameters, but instead of on the 15-minute, we did this on the daily. And yeah, we don't get a separate window for this because we did not do visual mode, but our results will be on that daily chart. So see, we made way fewer trades, right? We only did a total of 44 this time. And let's take a look at our graph. Okay, look at this. So we actually made a profit, right? We made up to almost, $1,100 there, and ended up ending right at about, well, let's take a look at our report here. So we made a total net profit of $486 with a profit factor of 1.17, with a decent modeling quality as well. So that's fantastic, right? Great job, us. However, don't get too excited. We may have made a profit here, but how long did it take for us to make that profit? If we look at our results, our first trade was in December 2017, and our last trade was in 2021, right? So this is almost 4 years that we were backtesting over. So we may have made $486. We made 4%, right? But it took us 4 years to make that 4%. Closer to 4.8, but whatever. That is a long time. We're looking at like 1.2% a year. That is nothing to write home about. Even though we made a profit, we have to consider our opportunity cost, right? Would this money have been better spent somewhere else with much less risk? And if you do find a good strategy that does net you a profit, probably worth looking at it more, maybe optimizing it a little bit, changing some of the parameters. But definitely trade it on a demo account until you're comfortable with your rate of return and you find that it's going to be more worth it than keeping your money elsewhere. Okay, so that is everything for the lesson today. Thank you all for sticking around, and I will see you in the next video. Thanks as always for watching this video. If you found this content valuable, please let me know by liking or subscribing to my channel. If you have any questions or comments about the material we covered today, feel free to drop a comment down below. And of course, please check out some of my other videos for more useful information. All right. I'll leave y'all to it.